There's always been an innovation economy, and JP Morgan has an entire business dedicated to helping it thrive. By bringing together founders, startups, investors, and ideas, JP Morgan's commercial bank helps empower thousands of high-growth companies that are shaping the present and the future. With tailored banking solutions and a global business network, JP Morgan helps innovators scale for today and tomorrow. Visit jpmorgan.com/startups to find out how they can help build your future.
Hey everyone, welcome to TechCrunch Live, where we help founders build better venture-backed businesses. I'm Matt Burns. Today's event features a couple firsts for TCL, and I'm really excited. We've never had two founders on the show at the same time, but today there's a very good reason. First, we have Frederic Kerrest. He's the COO of Okta. He's also an angel investor and a podcast host and a writer, and I'm not sure he sleeps. And then we have Mathilde Collin, who founded Front, the platform that supercharges communication. And she raised $138 million for this company. But her last round was interesting. She turned to super angels / operators for part of the round. Now, operators, you're going to hear that word a lot today. She raised from operators like Michael Cannon-Brooks from Atlassian, Eric Yuan from Zoom, and Jared Smith from Qualitics, and yes, Frederic Kerrest too from Okta. So today we're going to talk about raising capital from these industry leaders and non-traditional investors, and also Matilda's practice of radical transparency that led her to publish her Series A, B, and C rounds on Medium. So I don't have a slide deck to share with you virtually today, but we are going to look at some slides from her Series C later in the episode. But first, two quick announcements. Next month, TechCrunch Live is all about mobility with startups and investors, and the lineup is amazing. This is ahead of TechCrunch's two-day in-person event in San Mateo on May 18th through the 20th, and I hope you can make it. This is a really big show for us. Last thing, and then we'll get into the episode. If you're watching us on YouTube or Facebook Live or Twitter Spaces, click over to Hopin. On Hopin, you can talk to other guests, you can participate in pitch practice, and you can ask questions. It's just a great way to do it. And if you're watching the replay, maybe next week you join us live. We record live every Wednesday at noon Pacific. And with that, Frederic, Matilda, thanks for being here.
Thank you.
Thanks for having us, Matt.
Yeah, well, I mean, this is really interesting because you're both founders, but you're representing different things here. So Matilda, I would like to start with you. Can you give us a rundown of Front's funding, your Series A, B, and C, and when all that happened?
Sure. So we launched Front in June 2014. We went through AC. We raised our seed in September 14. And then pretty much 2 years after, raised our Series A. 2 years after, our Series B, 2 years after, our Series C, and 2 years after, here we are. Yes. So I'm excited to chat about anything.
Yeah, absolutely. Now, what changed between the Series A and Series C?
So many things. So maybe some that are pretty obvious, which is, of course, the scale changes. And I think the predictability of the business changes. We'll go through the Series C deck, but I think what we needed to prove was if you get more money, you know how to spend the money, and that will lead to growth. The reality is Series A, I felt like we had to prove that we had product market fit, a good team to execute, and a huge market. But how we would grow to 100+ million in ARR, like we had to figure that out. So that's one thing that changed. I think maybe just one thing that changed that is counterintuitive is a lot of founders believe that it will get easier because you have more predictability. I feel like it just gets harder. And so you need to have really good reasons for doing this. And I think it's because the scale of everything you do is just larger. The impact is larger. Like if you screw up, it has more consequences on your employees, your customers, etc. So it definitely doesn't get easier.
Yeah, and as I understand it, Matilda, you reached out to Frederic for something else, and he ended up writing you a check. That sometimes happens with my grandma. So I was hoping you could tell us that story.
Well, no, it's true. Well, the truth is, this is a common trick. Like, this is also how we hire. Like, I reach out to someone and say, like, of course, I'm not trying to hire you. And the person, of course knows that at a point I'm going to ask, is there a 1% chance that you might join this company? If so, then let's chat about it. I think for Freddie, it was the same thing. I actually talked to him because I was thinking about how to structure our Series C. And initially, when I had my first conversations, I didn't know that I would go the operator route. And so it was a good way for me to talk to him about just how Okta has raised, who they've raised with, who they like, who has been helpful. This is how we got introduced. And then this relationship ended up happening.
Yeah, Frederic, what's your side of the story?
I got totally tricked, just like your grandmother when you call her, Matt. No, that's how I remember it. I was fortunate we were introduced by mutual friends, and I really liked what Mathilde was doing, and I thought it was a big problem. Actually, the problem that Front is solving is a real problem. It's a problem I immediately turned to my internal head of customer support and said, "How are we solving this?" He said, "It's a headache," and so that's always a good first sign. And then we just started talking a little bit about the business and what she was doing. And, I was just a huge fan of hers and the business and the opportunity ahead. So for me, it was a no-brainer.
Right. And I believe you invest through several vehicles. Is that correct?
I do. Largely, it's independent investing with me and my family, but then some straightforward vehicles. There's an operator group, which I know we'll talk a little bit about, just angel investment groups. But yeah, I thought the strategy she had around how she put together this financing round for this Series C, about how she went out and talked to specific people she was interested in having on board was unique, and it seems like it's worked out very well for her.
Towards your investing, what's a good founder fit for you?
Well, first of all, I love enterprise software. I got a computer science degree a long time ago. I was much taller and better looking. I know it's hard to believe, but it's true back in the day. And I just think enterprise software is a great thing. I like the ability to talk to the end customer, to understand how you're going to help drive their business or organization forward. So I spend a lot of my time with technology founders that are trying to move enterprise software businesses forward, and at earlier stages. I mean, certainly the later stages are great. And if you're fortunate enough to become a public company, building public companies is fantastic. But really that first product market fit that Matilda just referenced, how you build that first sales team, how you build that first set of culture, who you hire as your first management, those are the most interesting and exciting parts for me personally.
And those are great topics to talk about, but let's talk about operators today. So Frederic, I was hoping you could define what an operator is in this context.
Absolutely. So an operator basically is someone who operates, not surprisingly. It is someone who has their hands dirty in running and building and growing businesses. In this case, obviously, we're talking about software and technology businesses, but really any business. Certainly, there's a lot of great value you can derive from institutional investors. At Okta, in the early days, we were fortunate to be backed by some of the well-known firms, Andreessen Horowitz and Sequoia and Greylock and Khosla. And they'll bring a lot of network. They'll bring a lot of ideas on how to grow. They'll bring a lot of ideas on advisors you can bring in, on maybe specific contacts. But also a huge part of this is just the day-to-day. How do you go about building a marketing team? How do you go about building a sales team? How do you think about scaling? When is the right time to go international? And having people who do that day in, day out and are very current with the trends, with best practices, and also, frankly, with a lot of the mistakes. I've made plenty of mistakes. So everything that I can help other founders with, preventing them from that mistake, it's not only just time well spent, but also it's just much better use of their capital as they go about building their businesses.
Yeah. Now, Matilda, what's your take on operators? What drew you to Frederic?
So I think, many things. One is, I wouldn't say that operators is better at like any stage, whatever kind of company you're building. I think at every fundraising, I ask myself, what do we need? Who can be most helpful? And in our Series B, we had raised with Sequoia, and they happened to be super helpful, still are super helpful. But I felt like as the company was growing, a lot of the things I was working on, I felt like I needed to reinvent the wheel on things that other people that are super smart have thought about like many times before. And so whether it's the examples that Freddie just shared, or it's like, when do you go international? Like, how do you, like, what's the comp philosophy? Like, how do you run your exec meetings? What's your operating cadence? How do you run all hands? How do you deal with market dynamics? And I could go and on and on and on. And it's just like, all these people are asking themselves the same questions behind their computer and trying to figure out an answer by themselves. And I just feel like it's a complete waste of time, because the things that are unique about our business, which is like our product market fit and the next products we will launch and what's, space we work in, what is our pricing, like these are the things that only us can figure out. And so I should be spending time on this. My company should be spending time on this. They shouldn't spend time on the things that so many people that are super good at their job have thought about like many times before. And so for us, it was a good opportunity to scale faster by having the wisdom and the experience of these operators. It was also interesting to work with people that are as passionate about changing how people work. Front is, disrupting industries that haven't been disrupted in a long time, like email and customer support. And if you think about Atlassian or Okta or Zoom or many others, they're also deeply passionate about changing how people work and disrupting things that people are going to use many times a day. And I think all of us believe that our products will be better by better integrating all these softwares. Like, this is just how work gets done these days. And so I think it was both like the individual, I think, is really great. And I can tell you more about what I'm looking for specifically in the individual. And their experience is great. And then their company is super interesting. And I'm inspired by it. And I think an ecosystem can be beneficial.
Well, let's walk through how you actually approached Freddie, though, right? So you emailed him, said, "Hey, come help me with this problem," and then how do you get his money?
And then I tell him, well,
it was Bitcoin. She sent me the address of her wallet, and I just sent it over. I think, Matt, that's how it went.
I guess I'm curious. What was the thing that unlocked his wallet, right? What was the number or the pitch?
Well, so the truth is, because he was helping me, I didn't pitch him. I can't remember exactly because it was 2 years ago, but most likely what happened was I talked about the problem we were solving. I talked about the traction. I talked about the investors that were interested in our round, which I think was also a testament to, what we had proved so far. I think I was very genuine in who I am, what I'm good at, not good at. And I think this is the combination of the problem resonates with him. I think he enjoyed talking to me, probably can confirm. And then we have some credibility because of, people interested in this round. That probably is the combination of the three things. I don't think, the truth is, whether I'm talking to potential customers, investors, or candidates, I never have a script. Like the reality is, I always try to deeply understand who is the other person, how they work, what they need. And I try to be very honest about whether it's something I can offer. And, in hiring specifically, but it's also true in fundraising and everything, there is no point in me telling you what you want to hear if I don't believe that that's the truth. Like, it's always a short-term optimization. And then we'll talk about it, but we're a very transparent company. I'm a very transparent person. So there is no point in me telling you, well, this is the best investment you can ever make, or this is the best job you can ever take. And then 2 days later, I'm super transparent and I tell you, like, these are all the problems. Like, I'd rather, undersell and over-deliver, and making sure that I understand deeply what motivates the person so that it's a good fit in the end.
Well, let's take a look at your Series C slide deck. Did you show this to any of these investors or any of these super angels?
Yes, I think so. I didn't run through it though. Like, that's the difference with VC firms. Like, I ran through the deck versus I think I sent it to them and then had a conversation about it. But we can, if it's helpful, I can start with this slide. I think, as I said,
let me set this up real quick. This deck has 25 slides, right? And we've picked out 5 of them, 5 slides to look at. And we're starting a quarter of the way through.
Yes. And I started, and still here, I think it's slide 5, where are we? Talking about the why. And I think one thing I've realized when pitching investors is they're very good at assessing whether you're genuine in your motivations. and whether your level of confidence is high. So one advice I have for, like the number one advice I have for anyone raising money is raise money when your level of confidence is high. And it's sometimes not correlated with your numbers. For example, it could happen that, you know, a few things happen. You hired someone amazing. You just signed a very big customer, like whatever it is that makes you super confident in the future of this company. And you'll always be better at pitching when your confidence is high, because I feel like this is something that's extremely hard to fake. So I think your level of confidence needs to be high, and I think your level of excitement for the company needs to be high as well, because people can, you know, perceive whether, you know, you're motivated or not. And so I always start pretty much any presentation I do, and definitely this one, by the why and why I keep doing this, even if things get harder as you scale. And like for me, the why is really about the mission that we have of making work happier. And we do that through the company we build and the products we provide and the thought leadership we create. And this slide is all about showing the things that mattered to me when I was 5 years old and still matter to me today. This is it.
Great. And then let's take a look at slide 12.
I just add a couple
let's
things
go back to there. Yeah, Freddie, you go ahead, take that.
Yeah, so I just want to add a couple of things that Mathilde just said that I think are worth emphasizing. The first is you need, you know, when she came and talked to me, obviously you're looking for someone who is willing to have that conversation and interested in that. You know, for me in building Okta, we benefited a lot from talking to a lot of the generation of entrepreneurs who are ahead of us and willing to take time out of their busy schedules to chat with us. And so for me, that's very important to pay that back. So the first thing is Mathilde called, we were introduced, she had some specific questions. I'm happy to help her. It had nothing to do with investing here or there. Turns out she's very impressive. I enjoyed speaking with her. She has a great business. I'm very excited about it. I was happy to help, but the check was secondary, first of all. Second of all, you know, I think that it's in talking, you saw how genuine she is in these conversations. Getting a feel for the founder is the most important thing for me, because time is my most precious asset. So the return on investment is important as an investor. I'm not a 501c3, but ultimately it's really about where I want to spend my time. And it's with people who care, who are motivated, who are interested. And the final thing I'll say is, and this I really want to emphasize, is sales is just so important at every stage of startups. You just heard it in 3 different ways, but very, very intelligently from Mathilde. You heard her say it's not what she's trying to sell, it's what someone else is trying to buy. And I think that's what people forget. So whether you're talking to a prospect, whether you're talking to, you heard her say, people she's trying to hire, whether you're talking to potential investors, it's not so much about what you're doing, it's about how they're thinking about it. You heard her whole pitch on how she gets amazing people to join the company. I mean, that is magic. And especially when you're building our kinds of businesses, these are people businesses, right? We don't have heavy machinery. We don't have equipment or factories. It's all about who you can hire, who you can get on board. Those are a couple of things I just wanted to highlight before we got into the rest of it that I thought was really impressive.
I'm so glad you're sharing this, because you never told me why you invested. So at least I have some insights today.
Well, it's just you, me, Matt, and our friends here on TechCrunch Live. So
great. Thank you for sharing.
Well, let's take a look at slide 14.
Great. Well, so this slide, I think, is like, probably if I could only pick one, the reality is I would pick this one, because many times I've talked about, like, before you raise, like, make sure that these things happen. But at the end of the day, you need to make sure that your company has good momentum. Like, this is just the reality of business. And so the way I wanted to show this was, not only are we growing consistently, so I chose AR, like for us, revenue is a metric that doesn't lie. And so being able to prove that every year we accelerate our growth was important. I think even more important than this is the quality of revenue you're bringing. So the fact that you don't have a leaky bucket, and this is our net retention. So if you take, a cohort of customer and you look a year after, on average, they spend 137% net of churn. So you have people that leave and then companies that expand. And so it means that, even if you don't bring new customers, you can still grow 37% year over year. So it was important to show this net retention, because I think it's a testament to your product market fit. And then just making sure that you show an acceleration. And so for us, we're a system of engagement. People that use Front, on average, use it 3 hours a day. 72 to 70, now 75% of our monthly active users are daily active users. It's very rare to find this in SaaS. And so just the fact that our usage is accelerating was a sign of not only things have been going well, but they've accelerated. So now is the right time to invest. So this slide is all about our organic growth so far.
Let me ask one question about this, because this is Series C and you guys are doing very well. But what about Series A? What do your Series A growth numbers look like?
Our growth has always been good. Like it was just like the numbers were smaller, but the reality is we've grown consistently. One topic that I don't think we'll talk about today, but that I'm very passionate about is discipline. Like I think it's people who don't know me like probably think I'm a robot, but it's like literally since the first day I started this company, every week I send an email to the company with like, this is what we've done last week. This is what we're doing this week. Every month I send an email to our investors. Every quarter, all these things every day, every week. I think it's so important to be disciplined about tracking your most important metrics and being accountable. And so for us, if every day at Front and every week and every month and every quarter, people know how we're doing from a revenue standpoint, which doesn't mean every day we hit our goals and all of this, but it means that we're looking at it. When it's not going well, we tell the company like, this is not going well, this is what we're doing to change it. Then most likely things will go up and to the right. It's not like, it's not a perfect growth. Like there are ups and downs all the time. You need to reinvent new levers of growth. But I think Series A, Series B, and Series C, we had consistent growth, and even Seed. It was like tiny numbers, but we had consistent growth. I think we'll go after to the next slide, but the next slide is about really understanding who we go after and having more control over our destiny. And this is something that didn't exist in our Series A. So in our Series A, I was writing a few Medium posts, I was tweeting a few things, we launched on Product Hunt, and all of this led to consistent growth. But if you had given me $10 million, like I wouldn't know how I could spend it and launch like 10 times on Product Hunt. Like it doesn't make sense. And I think here, what I try to show with this slide is for us, 2019 was really the moment we built a predictable sales organization. So not only did we figure out outbound, so we're not relying just on inbound, which is just seems more in control of our destiny, but also as we hired more salespeople, we managed to make them successful, which is the second graph. And then as we brought these people on board, we also managed to sign bigger deals, which then make all your unit economics better and allow you to scale faster. And so 2019, these are new things. Before that, it was just like a handful of salespeople. Like we didn't know at which pace we could hire new ones. Outbound was just not a muscle that was working. And we were mostly working with startups. And then over time, we moved up market, worked more with mid-market customers, small business, mid-market, and enterprise customers. And that was a new thing. So then investors probably get excited because, we've just figured out this thing, which means you can spend more money. And if you have a machine that's predictable and repeatable, then will lead to growth.
Frederic?
Yeah, a few things I would draw out of there, again, just to emphasize. The first one is, you see in the previous slide, but also in this one, this is really a pull from the market. She's not pushing a rock up a hill, both organically and when she was started proactively investing in it. You can see that this is a clear need. This is one thing I would really emphasize. I see a lot of founders who might not be getting these kinds of metrics, who are trying to put more money into it and really get that flywheel going. This is especially a problem today because there's so much private funding available out there, even in later stage rounds. So that's the first thing I would emphasize is, in the previous slide, the unit economics were very good. Secondly, I would highlight her market points. She talks very eloquently here about small businesses being a leaky bucket potentially versus enterprise and how those unit economics trend. I mean, you see a lot more value in businesses that can do larger transactions with larger enterprise. And why is that? Well, over time, the lifetime value and the cost of customer acquisition are just so much better in those enterprise buckets. And the last thing I'll say is you also see very good timing here on when she decided to go for the financing in the Series C. She decided to pour gas on the fire when it was time to do so. She knew how that fire was going, and she knew that if she put gas on it, it would accelerate in a way that she could control. And again, 2019, 2020, that was her Series C round. And that's where folks like me and other operators can really help say, hey, as you're going to scale now from 3 to 5 to 10 to 25 sales reps, here are some of the best practices to do it. Again, tractable problems, but as a technology founder, you might not know that intuitively, and that's a great place to get some advice.
Yeah, and I agree with that. I would just add one thing, which is I think the outbound motion is important, like especially for us. Like we were in a huge market, which is great and not great, because if you lack focus, then there is a risk that you're good at doing a lot of things and great at doing nothing. And so today, the way we talk about Front is it's a communication hub, and it's for building strong customer relationships. So whether you're in support, sales, account management, success, and you take every conversation as an opportunity to build a strong relationship, then Front is the best tool for this. So if we have a clear messaging and a clear focus, then we can go outbound, and then we can see if that message resonates with the market. And for us, like it was a big challenge because of the size of our market. And if I just tell you, well, Front is better email, Front is better support, like, you know, like, yeah, in theory, any company in the world could use it, but that's not a good place to be in. Like, instead, you want to make sure that you know which industries you go after, which kind of teams, what's your differentiation, and making sure that that message then resonates with the people. So outbound was a huge deal for us.
I love it. Let's take a look at the next slide.
Great. So I think this slide was aimed at highlighting some of the things that are pretty rare in SaaS, which is very high engagement from users. The expectation of users with softwares as time goes by just increases. Like now people don't want bad softwares, bad user experiences, especially for a tool that they're going to use many hours a day. So, you know, I said revenue doesn't lie, but the reality is, you know, it could lie. I mean, it's not sustainable, but like really the thing that doesn't lie are things like the NPS of your users or just how much time they're going to spend in the app. So for us, like being sure that we could show that the engagement is increasing, people collaborate more and more in the app, they use it more and more, the ratio of DAU, which is even larger today than it was 2 years ago. These were, in my opinion, really promising signs for the future.
What makes you happy on this side, Frederic?
Well, first of all, just listen to the confidence in her voice. She said that you want to have this confidence when you're raising, and that's when you should be raising. And that's one thing. But another thing is when you bring up these kinds of metrics and it talks about engagement, in particular in enterprise software, I mean, that's something that's very special. I would just add, though, you also don't hear any kind of exaggeration or pulling on the thread a little too much. Sometimes I see forecasts or people talking about, well, this is what it's going to look like. And it's like, look, you don't know what the business is going to be in 3 years. And that's okay, too. You should be transparent and say, I'm very confident in this. This is historical. I have a lot of confidence in what's going to happen in the next 12 months. 24 to 36, I'm a little bit drawing out there, and that's okay. You'll actually gain credibility by not saying, I am very sure what's going to happen 3 years from now, because no one knows. The other thing I would say is just you get a really good sense here from Matilda and how she understands her business. I mean, you heard her, talk about how she might, as a joke, consider herself a robot, but that kind of organization of communication to employees, to investors, to all stakeholders is really important. There's a program, there's a process, there's a plan. She knows exactly how she's going about it. My guess is she doesn't have too many other hobbies because you can see how deeply she understands the different parts of the business. And there's nothing more exciting as an investor or frankly, just as a supporter than seeing that in a founder who really cares and knows all the details.
Matilda, you were nodding your head about not having any hobbies. Is that true?
I have so I'm super competitive, and so I do play.
I can't tell. Is that true?
So I play tennis, I play soccer, and then I have a daughter. It just takes a lot of time, you know. But apart from that, it's true. Like, I mean, the thing is, goes back to the first slide I highlighted, which is like I love doing this job. I love it because of the mission we're on, but I also love it personally because I get to learn so much. As like just the fact that I can tell you, well, the difference between our Series A and Series B and Series C is massive. But that also means that my role has drastically changed. And every 6 months, I'm here and I'm like, okay, well, I'm not qualified to do the job 6 months from now. So I need to be very paranoid and learn all these new things because otherwise, I won't be relevant. And this is something that I personally get a ton of energy from. And I feel like the pace at which you get to learn in this fast growth environment is really amazing.
Do you ever get to the point where you feel qualified?
No, because I think you feel qualified for like 6 months ago. I think
that's great.
It's the Frederic Kerrest from Stripe was one of our first investors, and he told me this. I admire the company and the guy so much, and it was like, yeah, I just feel like what I know today would have made me such a great CEO a year ago, and I'm like, okay, well,
yes,
the expectation.
Well, we need to move on from the slide deck. We only have a few minutes left, and I'm going to go over on my time a little bit, but. I want to talk about your stance on radical transparency and why you published all of your decks on Medium along the way.
So the reason I'll come back to, so the reason there is no seed deck published is just because I didn't have a deck it was Y Combinator, and then we pitched at demo day, and then we were lucky to raise pretty quickly. But then when our Series A time happened, I was like, okay, I know nothing about how to build a deck. It's my first company. Also, I've worked like 1 year prior to building Front. So everything is new for me. And so I just looked online examples of Series A decks and couldn't find anything. And I was like, okay, well, I'm just gonna, ask a few people and start from scratch. And then I built it. And then I was like, what's the downside? And I think it was a combination of, I want to give back. I feel like every stage of France, a lot of people help me. And I'm so grateful for this. And I'm insanely lucky for all the help I've gotten. And I want to be able to give back to anyone. And I think publishing things just allows me to have more reach. And, I've done a few angel investments in the past. And many times I receive a deck and I'm like, oh, that looks familiar. It looks like my deck a few years ago. But I'm very happy with it, because do I want people to spend the time thinking about how they're going to organize their decks? No, like I want them to work on building the product and talking to customers and selling the products. And so I think if I wanted it for myself, then, I just want to give it back. That's the naive reason. Like I had no idea it would have such a big reach.
I think that's very caring and generous. And Frederic, you have extensive knowledge in this area, right? With pitch decks and educating founders. You've written a book about this subject too, and you have a podcast about it, both zero to IPO, right?
That's right. So, I think the exception and the reason I wrote the book is it just came out last week. Thank you for mentioning it. It's the field guide that I wish I had 13 years ago when I started Okta. It's got a lot of the practical tips and tricks. And another thing that's in there is, basically, we've organized it by the chapters that you're going to go through as you build these companies. They all start with a story of me absolutely train wrecking the topic at hand, whether it's sales, whether it's culture, whether it's financing, because what you just heard from Mathilde, it is the exception that she put those. How many other decks can you find out there? And it's a black box. If you're an entrepreneur, entrepreneurship is amazing. It's a great career. It's created all the net job growth over the last 50 years. There's just so many great things about it, but it's very hard. And if you're at home trying to hire someone or trying to build your first product or sell, it looks like companies like Front or like Meta or like Amazon were preordained for greatness. But the reality is they weren't. It was just a lot of hard work day after day. And so I think opening the kimono and being very clear and honest about what worked, what didn't work. And by the way, you can go back through her decks and see the progress and see her predictions and kind of how she did against that. I think that's very unique, and it's very helpful to entrepreneurs who are at home trying to build their own companies today.
Yeah. So I don't think I would normally have done this, but I have the book here and I read it and I really liked it. I did find what I like to do, and what we try to do in the show is to give actionable advice, not big picture stuff, like things you should do. Like we talked about, Matilda said, raise money when your confidence is high. That's just actionable advice. And that's what I found in the book. And I found a lot of stuff in there. So I do recommend it. It's great.
Thank you. I appreciate that.
We do have to go to pitch practice, but in the spirit of radical transparency, Mathilde, it's been 2 years since you raised your Series C. What are you raising for your Series D?
What am I raising, or when am I raising, or what's up? When?
Tell me.
Well, so it's an interesting market dynamic. So I'll tell you just a few things. One is we still haven't spent the money we raised of our Series C. So we've always been opportunistic when raising capital so that we could always raise at the best moment. As I said, I don't know if it's because I'm French, but I'm someone that likes underselling and over-delivering. And, before 2 months, like the past 2 years have been pretty crazy with insane multiples and insane valuations. And I'm just not someone that was super comfortable raising in this environment, because then, and I'm sure there are many words of wisdom in Freddie's book, but then you go public and you have different multiples, and like, this is just not a great place to be. And so it was a deliberate choice from us to not raise during this crazy period. So although it goes with downsides, like there is a war, the markets are not, like whatever, like I'm actually pretty happy with multiples going back to pretty much like normal. And that means that I'll think about it.
Fair enough. I appreciate that. Well, both of you, thank you so much for joining.
Can I add one more thing on that?
Absolutely.
I would just add and echo what Mathilde said. And again, it's just a very good example of being thoughtful about it. When you're raising capital, and we raised, almost $250 million in the private markets over 7 rounds from some of the big venture guys. And we went public and raised $170 million, and we've raised public market debt. The biggest piece of advice I have for folks is don't take the biggest check and don't take the biggest valuation. I mean, if it is the best investor, fantastic. But if it's not, you really want to optimize on the investor. Who's the person? Do they have the experience? Do they have the expertise? Do they get along with everyone else who's on your board? You want to play the long game. We actually passed up the bigger check 2 different times in our private rounds of financing, because we wanted to play the long game, make sure everyone got along around the table. These people, it's actually easy. It's terrible to say. It's easier to get divorced than it is to get rid of one of your private market investors. It is extremely hard to do and will probably tank your company. So if you make sure that everyone makes money at every single step along the way, that all the investors come along, at the end of the day, the 1 or 2 percentage points that you're going to save for yourself in equity, it's going to get diluted 3 or 4 more times. It's going to end up being a rounding error, and you want to just optimize your chances for success. So that's just one piece of advice from someone who's gone through it a number of times. And I think it's really important for entrepreneurs to think about the long game as they do about their fundraising.
I appreciate that. Thank you. Okay, well, pitch practice. So this concludes the TechCrunch live portion of it, and we're going to switch over with these two into pitch practice. And throughout the last half an hour, our staff has been talking to different people in the hop-in chat, and they've selected 3 different companies, and they're going to have 2 minutes to pitch, and they'll have 4 minutes to give them feedback on their pitch, more towards the pitching rather than the company itself. But the first person, we have Trent Johnson. He's the co-founder and CEO of LiveWeb. He's going to join us. Trent, are you there?
I am, Matthew. Thank you.
Great. Well, thanks for joining us, Trent. I'm excited to hear about LiveWeb, and you have 2 minutes starting now.
Thank you. So I'm the co-founder CEO at LiveWeb. In my previous company, we defined the reference architecture for native voice and video in 4 billion web browsers, and wrote the voice and video software that powers all the Microsoft products, including Teams and Skype. I'll start with our big question. Do you think the future of live business communications includes dialing a phone number, filling in web forms, scheduling a link for a video call to actually get to talk to a business? One of my favorite responses I get is, I sure hope not. LiveWeb connects businesses with their best customers and prospects by simply making voice, video calling, and messaging instantly available where and when they're needed for people to connect. We do this by eliminating telephone numbers, telephone companies, and regulation, making it simple to add live, secure, global, multi-channel communication directly into websites and workflow. We do this with a JavaScript object we call a smart communications object. Our customers use LiveWeb to reduce sales cycle time, increase conversion rates, improve the quality of their sales funnel, and power delightful customer experience. LiveWeb has a beautiful integration with Front. It's our primary integration and focus. Why? Matilda and Front have created a world leader in asynchronous team email, which is a critical half of business communication. LiveWeb merges the core services of synchronous real-time communications, voice, video calling, and messaging directly into Front's amazing workflow platform. The Front LiveWeb combination is the most powerful, elegant business service I've ever used. We're angel funded. Our angels include the co-founder of one of Canada's top tech exits, an oil and gas billionaire, and we're raising a seed round in Q3. Please come experience the future of integrated business communications at LiveWeb. No phone numbers or forms to fill out, I promise. Thank you very much, TechCrunch and the audience.
That was very good, Trent. And if you have a camera, you feel free to turn it on there. I didn't know we were going to have a Front type company in here, so that's kind of interesting. Matilda, let's start with you.
That was the strongest part of the pitch by far. I mean,
I love it.
Okay, I'm biased. No, I thought you did a really good job. Specifically, I think it is good that you build credibility, both from your past experience and from telling us a little bit more about how you do it. I enjoy you starting with the problem you're trying to solve and making it like dynamic by asking a question so we can all think about the answer. And so there is no risk that my mind is going to go somewhere else. So these are the things that I enjoyed. I think the things I would do differently is you talked about impact, but like in pretty broad terms, like increased conversion or, delightful customer experience. I think it's always interesting to really understand the ROI of what you're doing and just telling us some examples of how you've changed the experience of a customer you're working with. That's one. Number two is, I don't know how far along you are in your journey, but at the end of the day, showing the momentum you have and the why now is important. And I couldn't tell if you've been growing, not growing at all, and just highlighting a few things that show the growth and the momentum and the why now, I think is important. And the last thing I would say, because I want to give time to Freddie as well, is while I have so much respect for our investors, I always think that highlighting who invested in your company is not the most important thing. I'd rather you focus on the customers that are using you and how their experience with their customers is different than telling me names of people that have invested in your company.
Very good.
Thank you, Matilda.
Frederic?
Well, yeah, I mean, Matilda just took everything away, so I don't have that much to add. No, look, Trent, I think you did a great job. I think it's always tough to be in that kind of situation. I do commend you on having a very concise and clear elevator pitch. I think everyone needs to have one. You never know when you're going to run into someone that you want to hire, that you want to have invest in your company, that you want to have use your product. So I thought that was very good. I think that a couple of the things Matilda highlighted are just things I would echo. First of all, it's always good to have specific things, like you said, sales cycle time, improving the quality of conversion and other pieces. But can you put a finer point on that? Can you use specific examples? So the next question I would have is your product in market today? If it is, you probably have 1 or 2 or 3 customers who you could use. Or if not, I'm looking at you. Maybe it's just in POC or something?
With a few early customers, but we're struggling with product market fit. We're wandering in the dark at the moment. Frederic, working very hard.
Well, that's it. I understand, but my guess is you could probably work with a couple of those customers and say, hey, can I use your name? Or if not, you can say, look, we're working with a large insurance company and they got this specific ROI, this specific total cost of ownership, and this specific reduction in getting this kind of product up and running. I think putting a fine point on that would be good. I also would just talk a little bit about what you're trying to do with this round. I think to Matilda's point, it's one thing to say, I have this person, that person. That's not even so important. I would just say, we've been very capital efficient. We've been able to do all these things on this small amount of capital. now we're trying to do this, and this is why we're looking to raise this kind of round. Finally, I would just, in general, for the audience, be a little bit careful about all these terms. Seed, pre-seed, post-seed, Series A, this has all got jumbled up. Back in the day, in 2009 and 10, when we raised, it was $1 million seed and a $10 million Series A. I think $10 million is now a pre-seed or something, but the numbers really don't mean that much. It's more about like what you're trying to do, where you are, and what's next, or some of the things I would highlight. But again, great job, especially being on the spot like that. I like what you did. Congratulations.
And just one last thing, I appreciate so much that you said we're not at product market fit just yet. Like, I think it's so important that you inspire confidence to the people that would invest in you. And like, I think it's so easy to say, yeah, well, we're at product market fit. And then it's just a hard thing to do. And we shouldn't expect you at the stage you're at to have product market fit. So huge kudos for that.
Thank you. Yeah. Quick omen this morning, the condo I'm staying in Toronto is across the street from your Okta headquarters here, Frederick. So it was, yeah.
Meant to
be. Thank you for that. I appreciate it.
Very good, Trent. Thank you so much for joining us. We'll see you next time.
Thank you.
Great. Next up, we have Carolyn McAfee. She's the CEO and co-founder of ClearOps. Carolyn, are you there? Maybe. I'm clicking through the Zoom and I see you now. You turn on your mic and your camera and we'll get going here. Okay.
Okay. Hi. Yes, Carolyn McCaffrey.
Hi there. Well, you have 2 minutes to present your company starting now.
Okay, great. Well, thank you for having me. My name is Caroline McCaffrey. I'm the CEO and one of the co-founders of ClearOps, which stands for Clear Operations for Privacy and Security. I've been a lawyer for over 20 years working with startups, and for the last 10, I have been focusing on data privacy and cybersecurity, and that is exactly what ClearOps does. So these days, when you're a vendor trying to sell software to potential customers, one of the things that they want to know from you is how they can trust you. And so they will often send you long due diligence questionnaires or require you to have some sort of security audit, or maybe even conduct public due diligence about you in order for you to build that trust. So ClearOps has built an AI algorithm that helps you respond to these questions quickly and efficiently. So the value of ClearOps is that we reduce the sales cycles, and we also help you with your ability to comply with different regulations. And so you can build that trust with your potential customers. We are currently taking on about 2 to 3 customers every single month. So we're seeing extreme growth. And to put it in perspective about what we do for these vendors, when you're looking at responding to due diligence questions, we have actually done the math, and it takes about 4 minutes for you to respond on a per question basis. And with our AI, you can reduce that down to 30 seconds. And so now you can actually really streamline your ability to respond to the security and to put more of the time and effort that you need into securing your systems and making sure that you are treating data with the privacy requirements that you should be treating it. We have raised a friends and family round, and we are currently seeking our next round of about $500,000. And I have 15 seconds left, but that's pretty much it. So I'm done.
Very good. That's all right. Thank you so much for that. Frederick, let's start with you.
Yeah, well, congratulations first and foremost, Caroline, on your business. Sounds very exciting and interesting. Certainly, I think that what you're doing that's a big problem. So I always like starting with like, how big a problem is this, right? Is this a big market? Clearly, I think data privacy and cybersecurity, which were a couple buzzwords, but you used them up front very well. I think those are big markets. I think double clicking into some of the things that I think would be good to clarify in your pitch. First of all, is like what you're doing. Data privacy and cybersecurity are very big. And you talked a little bit about due diligence questionnaires and reducing sales cycles. But I think specifically how you help people do that would be good. You know, AI is kind of like ML and all these other things that are just buzzwords that people generically use. Like, what is the thing that you're doing and how is it special? I would also say from a team perspective, obviously you have a lot of subject matter expertise, having spent a lot of time in this specific industry yourself, but who else is on your team from a technology perspective? This is going to be a technology play, right? It's going to be, how can you build a sustainable competitive differentiation in terms of product technology, in terms of what that moat's going to be. So, you know, we have this founding team and these technologists have this experience and that experience, these kinds of things. And then finally, I would just think about, who you're going to pitch to. Your pitch was very good, but if you were going to be pitching this to institutional venture capital firms, even smaller early stage firms, I would say that you might want to adjust your pitch a little bit. Adding 2 to 3 customers a month might not be the kind of accelerated growth that some of the large firms are looking for. Now, if those firms are each paying you $10 million a year, oh, I love it. But we just need to get a little clarity on how that is and where that goes. So look, overall, I thought it was very good. Nice job. Congratulations on the business. Just a couple of things I think you could maybe fine tune as you start building this pitch out more.
Thank you.
I agree. I think maybe to add to what Freddie said. So I think the thing that you did that was really good is when you put numbers and it took 4 minutes, it takes now 30 seconds. And I think you shouldn't wait the very end of the pitch to share this. So it's very clear. What I liked is I actually liked that you didn't use the full 2 minutes. Like, the shorter you can be, I think the better. On the things that I think you can improve, I would say that I echo what Freddie said about 2 to 3 customers, but I like to be more precise. What people expect is every month being better and growing faster. And so if you add 2 to 3 customers, every month, then yeah, you're growing, but could you add 2, then 3, then 4, then 5, then 10, then whatever? And I think that is the momentum that people want to see before investing in a company, and they should always feel like things are accelerating. And maybe they are because you're closing bigger and bigger customers. Maybe they are because your customers expand. But related to this, one of the things I said just a few minutes ago is inspiring credibility. And I wouldn't personally use extreme growth. Like, this is an extreme word. And so I think you can say fast growth, but anything extreme, amazing, superlative, like I would be careful with the words. And the last thing I would say is we can't tell if you have product market fit or not, but it seems like you do because you add customers. If you do and you say you're raising 500K, I always really like when people tell me what they're going to do and what the milestone they want to reach, because it inspires confidence and you knowing where you want to go and you understanding how your business works, what levers you have, and so understanding how you can spend the money. But overall, I thought it was a great pitch, and just 3 things I would tweak slightly.
Thank you so much. I appreciate both of your feedback.
That was great. Okay, well, we have one more. Caroline, thank you so much for joining us. I hope we come back next week. We have one left. We have Steve Ward, the founder and CEO of Authenticate. Okay, Steve, I see you there. Turn on your mic and camera. And hello, sir.
Hi, how are you? Thank you for having me.
Good, good. Well, you have 2 minutes to present Authenticate, starting now.
Wonderful. Well, I'm Steve Ward, founder and CEO of Authenticate. We authenticate anyone, anywhere, and anything about them. Although companies like Okta are what you would consider to be the tip of the spear, they start with helping prove an identity through their integration network and the partners that they have there to assist in that one feature. And then they are the blade that allows you to continue to manage that identity as you continue to monitor their access and use of your products or services. Well, we are the spear itself, because once we've proved the identity of anyone, anywhere in the world, then we'll prove anything else about them that they claim is true. Education, employment, professional licenses, motor vehicle records, criminal records, income, assets, you name it. I could go on for another 2 minutes. Not only, but we can continue to monitor these people for you for change in information, immediate arrests, bookings, incarcerations, warrants, anything that might take you to want to restrict or revoke access for that identity that has use of your products and services. This is a massive problem that everybody knows is growing worldwide. And what we've done is the heavy lifting of going through those 20 different integration product categories on Okta, and we've put it all together for you in a single point of failure. You have a unified billing statement, you have one single contact, you have no minimum monthly commitments, no long-term contracts. We allow you to go to market faster and eliminate the costly research and development, the data compliance and privacy rules, all the information security requirements. We've done that security audit for you already. We're trusted by over 3 enterprises and 55 SMBs already, with over 200 customers in our queue. We have the ability to give you everything that you need and more.
Steve, I love your energy and I love those windows.
Thank you very much.
Freddie, let's start with you on this one.
Well, that was amazing. I loved it, Steve. Great energy. Thanks a lot for that. Look, there's a lot of things to like in your pitch. Obviously, I know a little bit about identity management, and certainly some of the things you're describing are a big problem. I think that it's great that you have some customers. I would probably start with a little more of the details around specifically why you now, what that call to action is. I love analogies, especially when they're super clear, and using it like, there's this other piece and this is how we work with it and this is how you could think about it. That's great. I thought spending 30 or 45 seconds on the analogy was maybe a little bit too much, but I think that was a good transition. One thing I'm not clear on is is it for employees? Is it for your customers? How do I think about it? Is it for people that I'm hiring? If so, you should I'm sure that your competitive market very well. There's very large organizations out there, obviously companies like Deal and others that are very, very well funded that are going to come up in people's minds if they've been looking about this or thinking about this. So I would keep that in mind. And then finally, there's just a couple of things I would tweak. You want it to be a pretty positive pitch when you go through it, talking about points of failure, maybe like opportunities for access or other things like that are kind of how I would spin it. But look, love the energy, love what you're doing. You were coming through the monitor loud and clear, so good for you. Congrats on all the success.
Thank you very much.
Mathilde?
I think the energy is amazing. It's inspiring. I'm energized right now, and I think this is thanks to you. So that's good. I think whenever you inspire, so much enthusiasm, I think it's important to counterbalance that with grounding in numbers or grounding in reality, because you will inspire trust more if you can say, well, I'm genuinely so excited about what we're doing, and this is where we are. This is where we are in our journey. These are our numbers. These are whatever you want. I would make sure to keep the energy super high and the enthusiasm, and at the same time ground your pitch in some more tangible things. I think the thing that I got out from the pitch is I understand the problem. I think it's a massive problem. I understand you more. I understand your motivation. This is great. I don't understand where you are in your journey. And coming back to what I need to feel is a fear of missing out if I don't invest today in your company. And there is nothing that I got that would tell me why now. And this is important because at any stage, even pre-product market fit or Series E, you still have a why now that you should make sure you can put words on. And I would put these words on. These are my main. That
was fantastic. Put words on the why now. I think that's very good.
Well, me or
go ahead, Steve.
Oh, I'm sorry. I was going to say thank you so much for that feedback. It's very helpful. I hope I have the opportunity to maybe pick your brains later offline if I'd be so lucky. But insofar as Authenticate, we have over 200 customers in our queue, and we need money to support more. We're getting inbound interest through pay-per-click ads for cents on the dollar. Our already organic search engine optimization. And by integrating with platforms like Okta, we've integrated with property management platforms, and we have 2 enterprise customers that came to us for free through there. So our acquisition cost is next to nothing. It's a bottoms-up strategy. We have a couple enterprise customers going live, which is giving us $1 million in ARR already. We're only asking for $2 million at an $8 million pre, so that I can hit some more milestones, so that 3 years from now, I'm asking for $10 million at $100 million post.
I think I would just make the pitch that you've done in 2 minutes, 1 minute, and then keep 1 minute for the thing you just shared. And out of the thing you just shared, I think everything was great. Instead of saying, I want 2 million to raise 10 million, I would say, I want 2 million to grow from 1 million in AR to whatever, but not funding is not an end in itself. It's just a mean to an end. And so understanding what milestone you want to reach, that's not fundraising, I think is important.
Thank you so much.
I couldn't have said it any better. I thought all the data that you just gave us at the end, like I want to see that in the elevator pitch up front. I would also, though, echo exactly what Matilda just said. Like, don't worry about the pre and the post. And, investors want to feel like they were part of it. They want to feel like they had a say in kind of where those valuations came in. They probably prefer not that you dictate where they're going to go. But everything else is great. How much you're raising, what you're going to do with it, where it's at, the cost of customer acquisition, like all that is fantastic. Bake that into the first part, and you'll get a lot of like those specific objective data points baked into your subjective pitch. I think it'd be very powerful.
Wonderful. Thank you so much, everyone.
You bet.
Yeah, that was great. Everyone, thank you for this great episode. I really enjoyed it. One of my favorites so far. So until next week, Mathilde, Steve, Frederic, thank you for joining us.
Thank you so much for having us.
Thanks for having me. I really enjoyed it. Take care. Have a good day.
Bye now.